Hey everybody, I'm Logan Alec. I'm a CPA. I own Choice Tax Relief, where we help folks with tax problems. Folks who owe at least $10,000 or more in back taxes, folks with multiple years of unfiled tax returns, we can help you. Give us a call, 866-8000-TAX, or go to choicetaxrelief.com. Fill out that form on the homepage. We will reach out to you. Today, I'm talking to Tara. Tara's question: is it common for the tax debts to be allowed to reach the CSED dates by the IRS without collection efforts increasing? Great question, Tara. If you're confused by the question, viewers, let me explain to you what's going on here. So the IRS has 10 years from the date it assesses a tax to collect that tax. Okay, that 10-year time frame is called the collection statute of limitations. The last day of the collection statute of limitations is called the collection statute expiration date, or CSED. CSED. I think Tara put CSET, but it's CSED, collection statute expiration date. Okay, that 10-year period can be extended for various things: filing bankruptcy, submitting an offer in compromise. I've covered these things in other videos, but that's the gist of Tara's question. She's asking, hey, if the tax debt drops off after 10 years, it stands to reason that the IRS would increase collection and enforcement action and lighting a fire under the taxpayer in the years and months leading up to the CSED. And Tara, that is true. There is policy in the IRS Internal Revenue Manual giving employees instructions on what to do if a CSED is imminent, i.e. within 12 months. That said, Tara, the IRS does let a surprising amount of tax debt expire thanks to the CSED every single year. Okay? Now, caveat is this. The thing I just said, that the IRS lets a ton of tax debt expire every year because the CSED is reached, that is based on the last 15 years of my experience, right? And every other tax professional's experience, which is we've had an underfunded IRS in the 2010s, the second decade of the century. We had the COVID-19 pandemic where the IRS basically shut its doors for everything except essential functions. Okay? So we kind of had the skeleton crew IRS for a long time. IRS simply didn't have the resources to levy and go after everyone with an imminent CSED. Okay, especially if the balances are fairly low. The lower your balance is, the less likely the IRS is going to spend resources to go after you. That's just the way it is. Now, Biden administration, Inflation Reduction Act, the Biden administration's first major piece of legislative action in that new Congress and the Biden administration. That act is giving the IRS tens of billions of dollars of more money to be allocated over the next decade. Okay? So folks with an imminent CSED who may not have heard a peep from the IRS, other than an annual reminder notice 10 years ago, the IRS just may have the funds now to go after folks like that. So I say, yes, Tara, it is fairly common for that CSED to be reached without increased enforcement action by the IRS, but that narrative could be changing here thanks to the new Inflation Reduction Act funding. If you want to be sure that the IRS isn't going to touch your stuff, even if you have a CSED coming up, I recommend you study IRS CNC currently not collectible status. Okay? Because while you're in CNC status, the IRS isn't allowed to touch your stuff. They're not allowed to levy you. They're not allowed to garnish your wages, even if you have a CSED coming up. And while you're in CNC status, that IRS's 10-year time limit, the clock keeps ticking on that, right? So every day you're getting closer and closer to that CSED. Now, the IRS can kick you out of CNC status if they think that you're making more money now, or they get a sniff that you came into some kind of a windfall. So that is a possibility. But if you stay in CNC status until you hit that CSED, hey, the tax debt's gone, dropped off, don't have to worry about it. So CNC status is you're proving to the IRS, at least at this point in time, that you can't afford to pay what you owe, right? Or that 10-year time limit keeps on ticking. They will file a notice of federal tax lien against you to protect their interest, right? So you can't just, let's say you owe them $100,000 and you have $200,000 in your equity in your property, so they don't give you CNC status, and the next day you go sell your house and cash out for $200,000, and they don't see any of that, right? In their mind, that's not fair, right? So they will do that. But look, I mean, for many folks who, look, they're not looking to sell their home in the near future, at least until the tax debt drops off. They're not looking to refi, right, now that rates are so high, right? Who's looking to refi right now? Nobody. So they're not so concerned about the notice of federal tax lien, right? They'd rather live with the notice of federal tax lien as long as it means they don't have to pay anything to the IRS, that CSED comes and goes, the tax debt drops off, the lien drops off, you don't have to worry about it anymore, okay? If you'd like to learn more about CNC Status, check out my video at the upper left-hand corner of your screen. If you'd like to know about comparing CNC Status to an offer in compromise, check out my video at the bottom left-hand corner of the screen. If you'd like a free consultation with us at Choice Tax Relief, if you owe at least $10,000 in back taxes, you qualify for a free consultation, give us a call at 866-8000-TAX or visit us at choicetaxrelief.com. Fill out the form on our website. We will reach out to you. Thank you so much, everybody. I'll see you in the next video. Bye-bye.